Hello everyone and welcome into the channel. My name is Brent and in today's video we're covering on how I spent $1,000 this week on margin inside my Robinhood portfolio. We're going to go ahead and go over what I purchased and our update 21 of 2026. So we're going to go ahead and hit up a few areas. Market update number one, our buys that we did with our margin, then dive it into our portfolio and taking a look at with this margin, what did we buy and how does it affect our income wise, and then jumping into the Robinhood portfolio and kind of talking about why exactly I decided to go into margin right now and what is our plan going forward. So with that said, let's go ahead and get into the video. If you guys have any questions, drop them down below. Let me know if you guys are buying, selling, staying put through this market, and check out the pinned comment. Okay, let's jump into the market updates. Market update, check out the Instagram. I like to post there every single day right now. Congress came out complaining that $174,000 is too low to survive for two couples, whereas they're trying to block the $15 minimum wage. Also, Monday, we had our little news segment here. President Trump delayed the attack over on Iran a few days out. He delayed it. He didn't cancel it, so it's supposed to still go through. We'll see if he tacos. We've also seen gas prices. I know here where I'm at here on the West Coast, I was driving by on the streets. Gas prices have now hit in some places. The average here is over $5, but we're seeing $5.60, $5.70 in those Shell and higher tiered gasoline stations. It's pretty insane, and this is just going to continue moving higher. Prices are not going to be coming down anytime soon, and that's going to be building a bit of an issue here. Don't worry about checking your portfolios, just continue to accept that red light therapy. And as of the last 4 trading days, Thursday up until Tuesday, $2 trillion have been wiped out of the US stock market in the last 4 trading sessions after the S&P put on a all-time high there on Thursday at around 11:30 in the morning. It has just continued to sell and sell and sell. And if we jump into the S&P 500, last Thursday at around 9 a.m., we had actually hit a high of 749.52. Now we have retreated from there. We had some inflation numbers come out, kind of spooked the market. Also, bond interest rates were a bit high in that 5% level, I believe. So that's definitely spooking the market. Why can't I just roll into some high interest bonds, 5%? I'm seeing some bonds out there that are in the 5% yield range, no NAV erosion. Why not roll into these, keep my money parked while the market is very volatile? We did break to last Tuesday's low. So if you take a look here at the 5-day period right on through here. So Tuesday, May 19th, we look at Tuesday back here on the 12th. The low last week, right around 8:30 a.m., was a low of 732.12. And then here today, it actually did break below that. It hit 731.54 as a low, then bounced on near that support, rode back up, and then kind of sold off in the end of the day. Right now, futures, if we pop over to the pre-market, futures right now are looking, a bit flat, even a bit green on the NASDAQ. The greed and fear indicator has been moving slightly lower and lower. I think I posted in the Discord, it was around 67 last week. It was 64, 65 at the beginning of this week. It's now at 60. So we're kind of moving more into not so greedy. We're kind of being almost neutral here in the market. So popping back, that's essentially our quick market update. Not a lot of news has come out. We do have NVIDIA earnings coming out Wednesday after hours. So if we pop over and take a look here at NVIDIA is the last thing here of the Mag 7 to report. And if you go back and actually look at the last earnings that took place here, they actually beat on earnings per share. They beat on revenue. Here we have a surprise of 5.5 and a surprise of 3.03 back in February, but they sold off by over 6%. So if we take a look here at NVIDIA from these highs to these lows, let's see here. This is all Wednesday into Thursday right on through here. So we'll just say, yeah, okay. So we'll just take this little check mark, go on down. They sold off after hours. We'll just say nearly 4 to 6%. And then even after they sold off that initial 6%, they continue to sell off an additional 13% before bottoming out on the 31st of March, similar with the rest of the market, and then pulling up from there. So we shall see. We can see a couple, lines in through here at 194. We'll see. Nvidia earnings could play out very well, but still take down the market. That is the market update. Let me know down in the comment section below. Do you think this week will kind of be pretty mellow and will kind of average out zero, or do you think we'll continue falling down into the red? Let me know down in the comment section below. Now, jumping into our margin buys of the week this week. So let's jump into our buys and sells. We did do our 2 buys this week. These are 2 positions that I just want to continue adding more equity into. These are 2 of my favorite covered call ETFs. So TAP Alpha S&P 500. This is ticker symbol TSPY. T-SPY. We did pick up 19.426888 shares at $25.51. This was filled back on May 18th, 2026 at 10 a.m. So we pop over here and we take a look here at T-SPY on the 5-day, and we go look at Monday right on through here at 10 in the morning. So you can see right on through here, there was a little bit of a sell-off here. So at 10:08 in the morning, right on through here, I didn't quite buy the highs, right? I want to try and dollar cost every single week into the market when I can. So the market was selling off right on through here. I went ahead and entered right in through here. It has had some movements where it went up, down, up, and it's essentially a little bit lower than where I initially purchased into it. The second stock that I purchased in here was TDAC. This is the Innovation 100, similar to the NASDAQ. We went ahead and purchased 17 shares of this one. So I spent $473.54. I do want to buy one more share, and I'll talk about why here in a minute. And the market has sold off a bit more on Tuesday, so we'll see how Wednesday plays out, but I'll probably end up just buying one more share here, but we'll talk about that. So we purchased this one here at 17 shares. It filled at 10:09 a.m., so exactly right around the same price. Let's pop over to TDAC. Popping right over here. So Tuesday, right on to, no, it was Monday. Monday is right on through here. Okay, so here's our area. It did kind of bottom out here right around 9:30, making it look like it was beginning to recover. I did go ahead and enter it right in through here, and we can see it did dip a little lower, but that is mostly because it did go ex-dividend today. So we are going ex-dividend today. You can see right on through there. They're paying out a whopping 0.382 per share. And we'll take a look at how that compares to our previous payouts and to where it's at now. Okay, so those are our 2 stock buys this week. Now, let's jump into our dividend portfolio, as that is the third thing I'm going to be talking about. So dividend portfolio wise, here's our purchases on May 18th, 2026. We did buy T-SPY. We moved from 4,100.57 shares, like I said, and I picked up 19.438288, and that was able to round my fractional share up to a full share. That was the whole process there. I hate having fractional shares unless I absolutely have to, so I don't, I've always wanted fractional shares, but I always prefer whole shares. So we did go ahead and move that all up. So now we own a total of 4,120 shares of T-SPY. Our monthly income went from $12.30 per month to an average of $12.36. That's an increase of monthly of $5.83. Multiply that by 12, that increases our annual income by $69.94. So we moved from $52,178 to $52,248. And we did make that additional purchase in TDAC. We did have 4,100 shares of TDAC as well. We didn't quite buy 19 shares. We picked up 17 shares. That moved our position up to 4,117 shares. That brought up our monthly income from $14.35 to $14.40. That's an increase of $5.95, bringing our old monthly income from $4,472 to now $4,478 every single month, or increasing our annual income from $52,248 to $52,319. So that's an increase on a yearly difference of $71.40. So that's a nice little increase right on through here. You can see our shares have now been fully increased here. I don't know why this has the periods in here, but we can go ahead and eliminate that. And as we said earlier, TDAC right on through here, I have him in here paying an average of 0.35 per share, but this dividend payout is actually 0.382, right? We had a lot of volatility this past month, more premium. So we were able to get paid 0.382 versus 0.35, 0.382. So my income goes from 1440 to 1572, just like that, right? Our annual income just increased from 52,319 to $53,900 just with that little change alone. Now I like to kind of keep it on the lower end of average, so I will accept keeping it in here as 35 cents per share, but just know that there's going to be months with volatility that's going to drive our income higher in the month, and that's fine. It doesn't mean that because we get paid more income that I have to go out there and spend it all on my expenses, right? It's completely fine that if I generate extra income, that means I'll just have extra cash to reinvest. If we take a look at our command center and through here, we're holding these covered call ETFs that are generating dividends. I now have miscellaneous income from this YouTube channel. We've already passed our halfway point to nearly $100 this month for our YouTube channel. I'm now monetized over on Facebook. I have my other miscellaneous income from my YouTube's affiliates, referrals, and other miscellaneous things. I have my real estate business as well. And that all, well, not all of it, but the majority of it funnels back into my brokerage account, my core hub. I have all my daily expenses, my bills that are getting placed on my Robinhood Gold card. And then at the very end of the month, I use the capital within my brokerage account to pay down my credit card down to zero. I pay down my mortgage, I pay down my car loan payment, and then that excess amount of capital that I have remaining over at the end of the month gets pushed back into my brokerage account, which I'm able to deploy to dollar cost average to buy back more shares. That increases my next month income and my annual income, and that whole cycle happens and continues to happen going forward. So any excess capital that I have gets reinvested back into my growth and future income ETFs that continue to just grow with a slow appreciation, but also continue to pay out income, which I use to fund my daily expenses. So let's jump now into our Robinhood portfolio and talk about our margin account. Okay, so individual account, last week we did hit a high. If we look at the, we're down today 0.65. The S&P 500 lost 0.54. The NASDAQ is down and through here. NASDAQ lost 0.59. So we did lose a little bit higher. That's just because our position right in through here, TDAC, did go ex-dividend. It lost here 0.35 on paper, but actually lost quite a bit more. The Russell 2000 IWMI also went down 0.94. IAUI went down 1.39. So we just average a bit more on the loss side, down 0.65 on the day. If you take a look at the 1 week, we did hit a high last week of 359,000. This was not only our portfolio, but we did have back on the 14th, I believe around $4,000 of cash. Now, some of this cash was invested, about $3,000 we invested into some positions last week. We made that video how we invested bulk into the market. And if we see some red in the market, I'm sorry. And it continued to downtrend from that point that I bought heavy into the market. And then the other capital that I had in here, I went ahead and moved it into my cash account where I'm going to, has a balance right in there of 453 because I just paid my car down. So this cash that's in this account, as I get paid dividends in this account, it's going to move into my cash account. My cash account will be used to pay down my mortgage, my car and my credit card payments. And then that way I can kind of keep track every month of how much I'm spending and how much I'm kind of pushing back into my brokerage account that I'm invested in. So it's going to be easier to manage visually and on the balance sheet. So you guys can see right on through here that our margin used is $969.05. So it's not quite at $1,000. And that's why I do plan to buy one more share of TDAX. So on Wednesday, if the market continues to stay bad, negative at this point, I will more than likely just buy one share of TDAX, regardless of what the market's doing right now. Now you might be asking, why are you just using $1,000 of margin? Well, I'll let you know. I'm using Robinhood Gold. With Robinhood Gold, I get access to the Robinhood Gold card. And another big perk here is I get $1,000 of interest-free margin, completely free. I'm not being charged that annual rate of 4.5%. What this means is that I can increase my annual income right in through here, right? I just was able to purchase 37 shares between TDAC and T-SPY, increasing my annual income by $141, and it's completely free for me. So I will call that a win. Plus, I'm able to kind of digest how exactly the margin works here on Robinhood. There's not, I'm not risking anything. There's no chance of a margin call. I would like to invest more with margin, but with the markets as high as they are, there's a bunch of articles out there right now stating that there's trillions of dollars of margin being used in these markets at all-time highs and that we're an AI bubble. I don't feel comfortable pushing to extremes of using margin. I know it can amplify your wealth to the upside, but that is a double-edged sword, and it can also amplify your downside. Now, if a pullback in the market of say 5, 10, 15%, 20%, I would feel more comfortable using margin at that time to buy into assets that I already love and would hold long term and would be amplified back in the recovery. I don't want the amplification on a potential downtrend market, right? Right now, we're very close to that all-time high. Here is the all-time high. Let's go ahead and measure here. We are only about 2% from all-time highs. And if we were to, I buy right here and we continue to fall, say we fall back down here to, we'll just say 700, for example, that would be a fall of around 4.5%, and that would be completely fine. The market could fall 4.5% right now, and I don't think many people would kind of bat an eye. From highs to low, that would be a sizable sell-off. That would be a sell-off of around 7%. Well, I think it would be pretty reasonable given how much the market has put on just within this last month and a half. So we shall see how it all kind of plays out through here, if the S&P 500 and the NASDAQ will hold that support here at 730, or if it'll break on through with the help of NVIDIA. And after that, if the market continues to kind of sell off, then I will have no problem adding a little bit more margin into the account after I kind of test the waters. That's going to be it for today's video, guys. If you guys have any comments or questions, let me know down in the comment section below. Otherwise, I do appreciate everyone tuning in and hanging out, and I will catch you guys in the next one. Bye-bye.